Hi, I'm Pete Krull, and welcome to the Dollars and Change, the Expert's Guide to Sustainable and Responsible Investing podcast. We are here in beautiful Huntington Beach, California, and at the Future Proof Conference, and it's a conference on wealth management, and I'm really lucky enough to have Sarah Adams with me today from Vert Asset Management, who's also a good friend of mine. Thank you for being here.
Thank you for having us.
Absolutely.
Thank you for having me.
Let's start out with, tell us a little bit about your background. Tell us a little bit about sustainable investing and how you sort of came into the field.
Yeah, traditional. Participated in financial services right out of school, and I'd always tried to get out of it, actually, because I was interested in more like corporate accountability. What can we do to change the way things are done in corporations? And I thought the way to do that was through law and policy. So, meander through financial services into policy and law education, but find myself back in financial services at the just after the Great Financial Recession, because a project I was working on was actually convening different types of financial players, accountants, insurance, to how can we reform the financial system.
Okay.
And also at that time, there were a lot of social impact bonds, and philanthropy was changing towards more social entrepreneurs, and I thought financial advisors really need to know more about this. So taking the past financial jobs that I had and connecting that to today's environment.
And so tell me a little bit about what your inspiration was when you started Vert, and what was that path like?
Yeah, it was really seeing the financial advisor as a change agent.
Excellent.
But needing
dollars and change,
right?
Exactly.
But needing the investment manager to play along,
right?
And to action or activate what they were doing in their investment management process to better serve the advisor around corporate accountability.
Okay.
So that's really how we started Vert Asset Management. Is that Sam had a long history in mutual fund sales with financial advisors, and I had worked with financial advisors more on social impact bonds and understanding that landscape, and that there just wasn't something there that matched up with a business risk or corporate accountability. What can the businesses do differently that we're investing in? We don't want to make them our enemies exactly.
Right.
We're trying to invest in them. We are investors in the companies. How can we communicate to both the financial advisor and to the company on the other side of the investment
partner with them
vehicle?
is what it sounds like you're saying. Yeah.
More be a partner and kind of an advocate for how things were changing in the corporate and then a little bit in the legal regulation side of things, so that companies knew that investors were interested in that in a more friendly, proactive way.
So when you were deciding about how to put this business together, or how this asset management business together, how did you guys come on real estate being your focus?
Well, it was really. Sam and I had done a survey of financial advisors to understand what their needs were. And real estate, a public real estate access, something that was liquid, was missing.
Right.
And for sustainability, that is actually one of the best places to start, because it's tactile and we all live in it, and we're all in it most of the time.
Yeah, right now
even
we're
though
not.
We're outside. Yes, but actually we are in a structure.
This is true.
So if we, we're not indoors, of course, but the materials that are used that we can see and touch, that we're in contact with, this is a great way to communicate what sustainability can be. Like, what were the materials used for this in this instance? But for real estate, we live in it each day. We go to an office, or if you're not in an office, maybe you're in an airport, in a hotel, all these different environments that you can understand how, changing your light bulbs does impact the energy used in your own home. This is the same for a commercial size
Just at a much
building.
bigger scale,
Just
right?
a huge scale. So it was tactile, it's tangible, but it was also a missing piece of a financial advisor's portfolio who's already doing ESG.
Yeah, I know when we were putting our portfolios together, we always had to use a traditional real estate manager because we didn't have anything to sort of fit that niche. Now the reality is a lot of REITs are already starting to transition into being more sustainable, but it's nice to actually have an asset manager who is focusing specifically on the ones who are the best in class in that area.
Thank you. Yes.
So let's talk about real estate. I've heard numbers like 40% of our emissions are coming from the built environment.
Right.
How can we reduce that, and how can we, us as investors, really sort of embrace that?
So, investing in real estate is that actionable piece that you can, is that tangible piece of how emissions reductions can happen. It is 40% of the world's energy use. And 30% of the world's emissions on the flip side of that.
Yep.
So if those building owners are encouraged to, change out their lighting, revamp their HVAC systems in a timely way, because I think that is the kind of the lull of the real estate owner, is that they're generating income from rent, and they don't need to change a lot of stuff until it breaks. But it's those building owners who are looking ahead and saying, actually, this can garner higher rents if I pay attention to my CapEx and invest for sustainability purposes in my building. I have higher rent and maybe tenants that will stick around longer. Many of those, since we are invested in a lot of large publicly traded companies, a lot of those large publicly traded REITs have large publicly traded companies as tenants who do have sustainability commitments of their own.
Right.
And through
so they sort of partner up like
that. So they
that.
partner up. And then the real estate is really a supply chain to all other types of companies, because Amazon has warehouses. REITs own industrial warehouses. Yeah.
And like data centers too.
Data
centers
centers.
Was a big part of it
this
too.
is going to power this being uploaded to the internet.
That's true.
Somewhere.
It'll probably be on Amazon or one of those things at some point. One of the things I noticed as you were talking about that just now is how landlords sort of wait to the last minute to make changes. And I've sort of seen that as analogous to our culture, in that we tend to be more a reactive culture as opposed to a proactive culture. And I also can apply that to sustainable investing, because I look at us as sustainable investors as being proactive. We're looking for what's happening in the next economy. Does that ring true for you?
Yes, absolutely. It is definitely a leadership position to be more proactive, because it's unknown and you don't necessarily have someone or something to benchmark yourself to.
Right. We find that all the time. I like to say, we can't benchmark the next economy by using rearview mirror indexes. We just can't do that.
Yeah. So with the real estate companies that we speak with about this, on the related topic overall about being a leader, those who are leading tend to be either well-resourced, or they have someone who's come into their company who's been very adamant about the next economy.
Right.
And they said, it's a risk for us to take this leadership position, but we're going to do it anyways because we think that it adds value to our end client. So in the real estate sector, I think that rings true, but also in the financial advisor space for those who have started to do sustainability, ESG, SRI, whatever you want to call it.
The acronym of the week, right?
Please, yes.
So I'm going to give credit to my friend Garvin J. Bush, who runs the Green Alpha Funds, for using the next economy term, because that's their term. But one of the things that they've incorporated into that sort of philosophy is resource scarcity. And we haven't talked about water, but I think water is also another important aspect of real estate, and how buildings use it, either for their chillers or for, in a number of different ways. How does that apply to your investment strategy?
We do look at water. It hasn't been as considered as the emissions reduction, but it is the second, after energy, it's the second resource used.
And what are ways that buildings, reduce their water usage or at least make it much more efficient?
Well, there's so a couple of ways is low flow toilets, of course, in those types of buildings that have a lot of occupancy, residential, office. Some office buildings have the non-potable water, a purple pipe, and so that's a way to reuse water in the building that is typically a wastewater,
like gray water kind of stuff.
Yeah. But that does require a certain occupancy level.
Okay.
So for offices that have started to use that, some can't take full advantage of it because it does need to have a certain capacity. There's the irrigation systems outside the building. That is low flow irrigation and changing the plants to be in line with wherever they are in the climate
like
zones.
Xeriscaping and that kind of thing. Yeah.
Planting for your environment, not the environment you hope that you had your building in. So those are a few ways.
One of the things that I really like about Vert is the way you report. Okay. Your impact reporting is not just a whole bunch of text. You use graphics and you use a lot of things that make it easy for me as a professional, but also for the layperson to be able to understand, here's the kind of impact we're having, because that makes it easy for us as professionals to sell it. Because, I mean, at the end of the day, we still have to sell the concept of sustainable investing to the, to the end user, to the retail investor. So tell us a little bit about your reporting.
So on the reporting side, we've found historically engagement has been reporting the proxy proposals or the shareholder proposals that would go to a proxy vote and then counting those. And there are good ways to report on that, and they're impactful. We haven't made use of that. So what we've tried to report on is how the companies have changed after our engagement with them on some systemic issues around reporting. And more information into the system means better pricing. We hope more transparency so investors can accurately allocate their capital. And so what we've reported on is how those companies have changed, specifically around science-based targets. Have they set science-based targets? When we started engaging with them on science-based targets, has there been an uptick in committing to science-based targets? Our reporting says yes, there has in REITs, in real estate companies. Similarly, the Task Force for Climate-Related Financial Disclosures was a voluntary reporting framework and is still a voluntary reporting framework in many jurisdictions. We started asking companies about it when it was a voluntary reporting framework, is now a mandatory reporting framework in the UK. So there has been an uptick on companies embedding that framework into how they report. And that framework is significant because it has a governance piece to the company's strategy and their overall analysis of risk metrics to the business, where I think many companies prior to TCFD could get a pass with the sustainability person down the hall in the basement.
Gotcha.
Now not dialing in probably in this context. Yeah.
Well, and I, you talked about Europe. Europe just sort of tends to be ahead of us on a lot of different things. And Vert, I'll point out, is a global real estate fund, so it's not just here in the States. So I think that gives it a much more street cred, if you will, from a sustainability perspective because of that.
Thanks.
Yeah.
Thank you. No, I think so. I mean, when we speak to the different real estate companies around the world, there are definitely regions who are ahead, and there is some peer-to-peer sharing of ideas. So it is neat to see like a completely different industry, how they are iterating, and how many real estate companies look to Australia to
as like a guide? Really?
As a guide,
I wouldn't have known that. So Australia is a leader in this.
On this, and then Europe, and then the US, and then Japan. To put them in kind of rank order.
All right, so I'm gonna wrap you up with my favorite last question here. So we see so much negativity out there, especially when it comes to climate-related events happening, fires in Hawaii, or, I know you live in Southern California here, so you had a hurricane that threatened you a few weeks back. How do you, in the face of all this, and all the like anti-ESG negativity and that kind of stuff as well, how do you maintain hope?
That's easy. So
I don't want to give you a hard question for the last one, or maybe I do.
no. So I do a lot of mentoring with undergraduates for their career, and I do put myself out there as a sustainability expert, and they come to me for that. What I have learned from them is that a lot of undergraduate curriculum is now interdisciplinary.
Okay.
So they can be in the bio track, but they can also participate in the poli-sci track. So there's some cross-pollination with the education, so it's not just one area that a person is studying. So I feel like from the early days of someone's career already, if they're going to college first, they're getting a interdisciplinary look, and sustainability is all about interdisciplinary approaches. And so I feel like those students who are coming into the workforce from there are already better prepared than someone like myself who had to kind of piece it together, go down many doors, that were closed, or try to break through new ones. So I think that there is a lot of hope because the people coming into the workforce are just more interested.
Yeah. You know what? We're not going to retake that one because he came in through right at the end there. That's something you haven't seen because we've cut most of that out. But not that, but the folks going back and forth behind us here at the conference. Anyway, Sarah, I want to thank you so much for spending some time with me today. It was really interesting, and I hope our listeners and viewers love it as well. Thank you for coming out.
Thank you.